Fidelity Radio for a really great future. We're talking real money.
I want to ask you a really important question. Now, think about this for a second. We know our audience skews a little older, 40s, 50s plus, but let's for the older ones, the ones who are already collecting Social Security. I want to talk to you, or you're near collecting Social Security. You're in your 60s or your 70s. I want you to think back. Think back to when you were in your 50s. How long ago does that feel? Does it feel? You know how many years it was? You can count. But how long ago does it feel? Doesn't it feel like maybe not a decade or more?
No, it feels very recent.
Yeah, it feels really, really recent. I want you to remember that feeling because I have an interesting number that we want to share with you, and then some not so comfortable ideas about a source of income in retirement. But before I do that, I want to announce that this is now officially the last hour of our broadcast radio show, Talking Real Money. It already is a podcast. It's been a podcast since 2014, but it's going to be just a podcast. 5 podcasts, though, every single week on your favorite podcast service. And you can still call and ask questions and go to talkingrealmoney.com and type questions and get information on all kinds of money things and still get educated and hopefully entertained or annoyed if you're a Bitcoin person. That's our job, to annoy crypto fiends. We love it. We take it very seriously. And you can call us at 855-935-TALK right now during this final hour of the radio show. 855-935-8255. And then this will become a podcast next week, and you can listen again. Now,
I think we should take a vote before we go on to the topic, too. There's
what are
two
we
songs
voting
I got the band back here working on. It's either Auld Lang Syne.
You even said it wrong, so we're not doing it.
Auld Lang Syne. I said it right.
Auld Lang.
Auld.
Anyway, whatever. Now you got me saying it
Anyway,
wrong.
so you can do that one or The End by The Doors.
We're doing neither.
You vote.
But thank you, because,
It sounds like every other show.
Somehow we're going to get in trouble with somebody if we do anything, so I'm not doing it. Anyway, what are we talking about? Social Security. We don't want to talk about it. We wish we didn't have to talk about it. We wish that there was enough uproar right now that Congress would have done something or be in the process of doing something about it. But folks, it is a very, very high likelihood event that the Social Security Trust Fund surplus will be gone by 2032 to 2033. Once that is gone, then the law requires that benefits be paid out of the money coming in from current workers in America, and that would mean, you need to hear this number, it is a critical number for current retirees or retirees in the next few years. Benefits will have to be cut across the board 20 to 25%. So that means if you're getting a $2,000 a month Social Security check, it could go down to $1,500 if something isn't done to fix the mess. Now, what should we do to fix the mess? That is the question.
Yeah, and everybody's got an idea, right? Except nobody wants to do anything about those ideas. And
because they're all painful to someone.
Well, and if you're the people that are got to make the decision, if you're in Congress, people are going to be hounding you about this. There is no right answer because somebody's ox is going to get gored here one way or the other. But I guess the Penn-Wharton budget model is independent in some fashion. I don't know. It may be politically involved. I really do not know.
It is independent. The Penn-Wharton, okay. that's from the University of Pennsylvania Wharton School of Business.
Okay.
It's a model that was released that shows where the program is and then suggestions as to where it might go.
Yeah, and they looked at a number of potential options. You can go read this. It's right online. It's like 35 pages. It's fairly lengthy.
Fortune magazine. The story, but you can read the report. Yeah, the report's online.
Report. I took a look at the report this morning because there's a lot of different ways you could go on this, right? You could cut benefits, correct? Mm-hmm. You could make people wait longer, right? You could raise taxes.
Mm-hmm.
There's a whole bunch of different things you could do. The one that they favor is kind of, it feels very intricate. They want to raise the payroll tax 1 percentage point to 13.4, lift the earnings ceiling. You know, right now you only pay Social Security on the first $184,000 of income, I think it is,
That's
something
correct,
like that. And then reduce the amount of inflation adjustment, the COLA, which I personally think has been painfully low if you look back the last 20 years. I don't think it's nearly kept up with inflation.
Yeah, but they want to lower that even more.
They want to reduce that. Yes, right. So, and as they admit, this is painful. This is cruel, I guess is one word that they used on themselves. But that's the one they favor. We have discussed this a lot.
Truly, I am in the category of people who make more than $250,000 a year. Okay, I'll just tell you but it's the first time in my life, the last few years, first time I've ever made that kind of money in my life. I'm in favor of raising the taxable earnings ceiling.
Yeah, I think you just get rid of that entirely.
Just get rid of it. That'll solve the whole problem right there. That would solve the whole problem.
But then because the other side's going to want something, because that's raising taxes, then you could do something like raise the first year you can get Social Security like 63. 1 year, one little adjustment at the other end, because they could say we did something there too.
How do you feel about this? What are you willing to give up? Give us a call, 855-935-TALK.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Last hour of the radio show underway right now. Thanks for being a part of it, and keep being a part of the podcast that will air 5 times a week. Most weeks, unless, of course, we have a holiday or something. That could be 4, but mostly 5. 855-935-TALK is our phone number. Call us right now, and let's go to Federal Way. And James, welcome to Talking Real Money.
Yes, I have a quick question. I have a Vanguard index fund, but I was thinking about maybe try to switch that over to gold and silver a fund. Which one and how would that be wise to do that?
Why?
No.
Why? Why?
Why?
Why?
Yes.
It's
why?
because they said that from watching things, the dollar value may drop quite a bit. I don't trust the market right now with things that I see that's going on.
Okay. Well, let me just put things in perspective.
First of all, the dollar's already gone down.
Yeah, the dollar's gone down. You know that we've had bad things happen throughout our history, and I mean really bad things, and it hasn't destroyed the dollar yet. Right. And the funny thing about gold is, over decades, like we want to measure almost anything over decades, gold has been one of the worst investments on the planet. Horrible.
It's just a rock.
It's a rock.
It doesn't grow the dividends, doesn't yield any dividends, pays no interest. It doesn't have any growth potential other than speculation.
And let me tell you one other thing. Let's assume you're right for right now, that the market's going to fall apart, that the dollar's going to go down, the economy's going to collapse for right now. Do you really believe that the entire economy of the entire world is going to collapse and stay that way forever?
No, I don't think it'll stay that way forever, but I mean...
How will you know right before it gets better? How will you know right before it decides to get better? You're not.
I wouldn't.
You wouldn't. And so therefore you're going to stay in gold while it gets better, and the market goes way, way up, and you're going to go, I should have just been in the market to begin with.
Right.
No, don't do this.
Yeah, okay, well... that was just my question because I just looking at it, I'm thinking about things. So if you have gold already, then that's if it goes down, if gold goes way up and the stock market go down, that's to just sell it and capitalize that way.
Yeah, we don't think gold is a good investment for any purpose. We don't even think gold is a great end of the world investment, because if the whole economy of the planet collapses, and you have a choice between a can of food and an ounce of gold, which will you take?
Food?
Yeah, you and me both.
Harder to eat the gold.
Gold is not very good.
Crunchy. Yeah. So, okay. So, but back, because here's the situation today, right? Gold and silver have had a pretty good run of recent months. And so not very, very recently, but before that gone way up. And so what happens is people say, hey, I should have bought that because it went way up. And then they conflate that with some sort of sovereign debt crisis that's about to occur with the U.S. dollar because it's gone down over a corresponding period, a little over a year. And so they think, I got to go get that asset class. I got to go buy that. Well, here's the history of that kind of investing. Very poor return because you're chasing something that's already gone up. And over the long haul, as Don said correctly, you want to own the things that have worked for a very long period of time. Stocks and bonds, we can clearly see for the last 100+ years that those investments have gone up. Gold, no such track record.
You know what? Gold has absolutely, totally tracked inflation, and that's all.
Yeah.
It has given you the return of inflation.
Right. So if gold, if you had it before it went up, then you're okay. But if you to buy it now after it jumped, then that's not.
I wouldn't touch it. I never tried it. Neither of us believe in trying to time any market, anywhere, anytime. We think it's impossible to be right. The problem with trying to time the market is it's not just being right once. You have to be right over and over and over and over again, and there is zero evidence that anyone on the planet can do that.
Yeah.
So don't do it.
Okay, then.
All right, sir?
Yeah, all right. All right, then. Thanks a lot.
James, thank you so much for participating.
I'm only timed one time did it work right, by the way.
Your timing?
Yeah. First marriage.
First marriage? Oh, the end of it? Or
I timed my way out.
Yeah, I was going to say. So it wasn't the getting in. So you didn't get it right at the beginning. You got it right at the end.
Yeah, exactly.
So you got it right once out of 3 times.
Well, it's only twice.
2 times. Okay. All right.
I make things worse than they are.
Well, we don't know if the last one's going to be right. You got to live the whole one out. You got to
that's true.
Make it to the end.
Time will tell.
Time will tell. 855-935-8255 is our phone number. That's 855-935-TALK. And by the way, just want you to know, you can call that number anytime. Even though the radio show is gone, which it will be after we finish this hour, you can still call that number. And we'll get you on the show and we'll talk live. We'll talk with each other like this, just like we're doing today. And the other thing that you need to learn how to do, this is so important to all of you radio listeners listening to Northwest News Radio in Seattle. This is not important for you podcast listeners. I'm not talking to you right now. I'm sorry you have to hear this. I could edit it out, but I don't want to bother. Learn how to listen to podcasts, please. If you don't know how, learn. Go find the podcast app on your iPhone. It says podcast. It's really easy on an iPhone. On an Android phone, it's a little more difficult. You got to get the app and get Spotify. That's a good one. Or it's even easier than that. Just go to talkingrealmoney.com and you'll see a podcast player right there on the page.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And let me add one more thing to the whole gold story. The last big spike prior to the spikes in the 2000s, or actually about 2010, the last big spike in the price of gold, the last big excitement around gold was in the late 70s, early 1980s.
Yeah. Right.
Early, like January of 1980, when gold hit $850 an ounce, and everybody was saying, they were literally saying gold is going to go to $100,000 an ounce. There were people saying that. If you bought in January of 1980 at about $850 an ounce, you would not have broken even on that. Not after inflation. I mean, no, before you would have lost money up until 2008. 28 years.
Not including inflation.
Not including inflation. You would have lost money.
That should tell you everything you need to know.
You don't want an investment that loses money for 28 years.
It's a long time to get your money back, yeah.
Stock market's never done that, ever. Not even close. Let's go to Shelton, Washington now. Mike, it's your turn. Welcome to Talking Real Money.
Hi, Don. Just want to let you know that I started listening to you, I think, back in the 1990s when you were on KBNP in Portland. And I've enjoyed listening to you ever since. And
Thank you.
So I wanted to give you a call. And I even took my dad when he was visiting to one of your seminars in Portland back in the 90s or early 2000s.
I think we did one.
So,
we did
we
one. Yeah, we did several of them out there. Yeah.
Yeah, we did. Yeah, that was fun.
Yeah,
So now you're basically saying we're both really, really old. Thanks.
Well, I am too, because I'm on Social Security. And my thoughts, though, you were asking what people think about it. And I started listening to financial shows and getting my hands on money magazines when I was in my 20s. And I just always decided that I'm not going to depend on Social Security. So I've done pretty well. And that leads me to my next question, though, is that most of our stuff, my wife and I, she's much younger. I do most of our investing. We're with Fidelity with the vast majority of our assets, IRAs, work plans, and things like that. And I'm on the plan where I basically do it myself, and I can just get a hold of an advisor there if I need to now and then. But my concern is, because my wife's much younger than I am, should I pass away first, I don't think the advisors at Fidelity are fiduciaries. And I keep hearing these days saying that you should be with a fiduciary. Mm-hmm. So the people at Fidelity tell me when I have my annual meeting with them that, don't worry, your wife can just come in if you pass away, and we'll just take over the investing for her. And I say, well, that's great, but I wonder what your thoughts are, because I don't believe they're fiduciaries.
They are duly registered. Duly registered means they wear two hats. They have the broker-dealer model, which is the new sort of best interest standard. They call it BI, and it's really BS, if you ask me. It used to be the old suitability standard. They're supposed to not give you bad advice, but they don't have to put your interests ahead of theirs.
Well, I'll
except when they're offering acting as and under their wealth management arm. That's when it's fiduciary. It's so confusing.
Yeah, and I know people that work at Fidelity, and I know that they get pressure to sell products like annuities. That it's part of being part of an institution. They tell them, make sure you're peddling this. So that gives me a little queasiness. Again, not thinking that they're always going to do something bad to you as you would if you went perhaps to an insurance company, but the potential exists. So, yes, I think you should find a fee-only financial advisor. Here's what you can do. You're going to continue to manage it, maybe give them a little bit of the money so they're managed. So
or you can leave the account at Fidelity. No, you can leave the account because many advisors have a relationship with Fidelity as a custodian for assets.
Well, that's true. That's true. But what I was saying is start a relationship. Doesn't have to be all the money.
Right.
Start a relationship for maybe part of the money so that someone is there that you're comfortable with, your wife's comfortable with, and you know they're going to be taken care of properly in the future.
Okay.
And here's something, if you do want to work with them, have them put in writing that the person they're working with, that your wife would be working with, would always act in her best interest, all times, 100% of the time. If they can't put that in writing, then you got to find somebody else. And I don't think they will.
No, they won't.
Okay.
I can be pretty sure of that.
Okay.
All right. Good luck. Thanks
All right.
so much.
I appreciate the information very much, and good luck in the future. I'll still listen on podcasts when I can.
Good job.
Thank you so much,
We appreciate
Mike.
that. 855-935-TALK. That's our phone number, 855-935-8255. Again, the radio show is going. The podcast will remain. There will be no reduction in the number of podcasts per week. We will generally have 5 every week, unless, of course, there's a holiday or something, or Tom takes one of his extended vacations, and I'll try to fill in. But, fill in his shoes. That's a big order. What size
we did get an online post from someone who said, "How does Elevated Financial feel about no longer being able to ride your coattails?"
Oh, the show after us?
Yes, correct.
It was so funny. Should I say this? I can say it. It's the last show. Who cares?
Why not?
Our total audience numbers was like, around 20,000 people. For the show right after us, it drops to 5,000. It drops by like 3/4. you're smart. You guys are really smart. You really know. You know what's right and what's wrong. You just have to let your emotions, you got to keep those in check.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Just to touch on the fiduciary thing again, it was really, we were so close to having a true fiduciary standard across the board for everybody. Brokers, everybody but insurance agents, they weren't going to get it. The Dodd-Frank Act, right after the financial crisis in 08, 09, gave the Securities and Exchange Commission the absolute authority to impose fiduciary rules on everyone in the industry. But the Securities Industry and Financial Markets Association, a trade group, and the Financial Services Institute, a trade group of the brokers, pushed for this Reg BI, with the term best interest, and it was designed to make it confusing to consumers. Because it doesn't mean fiduciary. When they say best interest, you think, well, that means fiduciary. No, it doesn't. It means just tell
something in between.
You have to disclose conflicts, whereas a fiduciary can't have conflicts.
By the way, you can disclose them. People have to actually read the disclosures.
Yeah, they don't do that. 855-935-TALK. Join us on the final broadcast. And let's go to Sammamish. And Jason, you're on. Welcome to the show.
What will we do?
Hey guys, I apologize for the road noise, but I just wanted to call in on your final show, and I know I'll still be trying to get in touch with you on the podcast as well, but for the radio show, I wanted to make one last call. I just wanted to remind everybody that, where the fear and greed index is 10 right now in CNN. So I just want to remind people to stay the course, buy more if you have the cash to do so, buy more into these ETFs that you have, because we're going to look back in a year or a year and a half, and we're going to see how much things have gone up from here. So it's just, I want to, echo what you were saying earlier to the guy that was calling about gold. Just, buy through the fear and continue to watch, your profits grow later.
Tommy, our boy is growing up.
He's growing up. I'm very worried about you when you make these kind of calls.
I'm so proud of him now.
Send someone out to check on him, maybe, or fever of some kind, or not feel, something.
Thanks. No, actually, it's great advice, Jason. And don't pay any attention to mean old Tom.
I will say this, though. I think that, Tesla and Palantir and these other high-growth stocks will also be up largely in about a year and a half.
You knew that was coming. And where are you on the all-important, can't wait for it moment of the SpaceX IPO?
For SpaceX?
Oh, it's got to be any day, right? I mean, it's coming up soon here. I mean, I can hardly wait. I'm keeping my powder dry.
I haven't heard what they're talking. I haven't heard what the price is going to be on that. It's probably going to be pretty up there, but
yeah, it's going to be pretty up there, I'm sure.
But anyway, I just wanted to call on your last show and again say thank you to you guys, and I appreciate you. I'll miss you guys having a role in my Saturday routine, but I'll try to get into the podcast as well.
Yeah, and remember, you can just change the routine. Just put the podcast on in the car. There you go. Still Saturday routine.
Thank you, Jason. All kidding aside, thank you very much.
We appreciate all your contributions.
We appreciate. Yep.
855-935-TALK's the number. Let's go to Stanwood. And Bob, you're on. Welcome to the show.
Hey, I appreciate you guys receiving my call. You guys are just wonderful. Hey, I just wondered, at what point do we abandon our principles or ethics or morals just to profit on others' misery or suffering? I mean, is there a point to where you say, I'm not going to buy bombs or I'm not going to invest in this? And basically, as long as I'm making good money, is that a good investment? Or do you just say, I'm not going to contribute to this?
It's hard. We have talked a lot in the past. We haven't done it recently about ESG investing, environmental, social, and governance, because it is difficult if you are a broadly diversified investor to pick and choose the things you don't want to put money into. So you do have to kind of leave some of your morality on the sidelines to invest in the best interests of your future.
It's so hard to define those things. That was the other thing we figured out from ESG was, where does this company place here? But you can build a portfolio in today's world, especially that excludes the companies you do not wish to support.
Yeah, it's just a little bit more work.
What if it? I understand and I agree, but basically, if you can make a whole lot of money investing into something that's going to destroy the planet, is that a good investment?
In and of itself, no, it wouldn't be for me. But I don't
you understand what I'm saying?
I totally get it. Like if there was a company out there and I could buy that company, and I'm not going to call it X because somebody already has that, so I'm going to call it Z, Company Z.
Yeah.
If Company Z had the ability to destroy the planet, absolutely, and I knew it was a high likelihood that they would, but I could turn $10,000 into $100 million by investing in it. Would I invest in it when I was confident, 100% sure they could destroy the planet? No, I probably wouldn't.
No, but if you thought you could make $100 million, then there might be a possibility that they could. Would you do it?
See, no, because then that becomes a matter of opinion. And I'll give the best example I can think of. The best example I can think of, and I think this may be where you're going, is AI.
I'm going with anything that can basically have the possibility and capacity and capability to basically take us backwards and not for a future for our children. And if I can make a lot of money now, I don't need to care about the future because I won't be here.
But the problem is, again, it's all in the definition. There are people who are saying AI could destroy the human race.
I agree.
That's unlikely. It's anything is a possibility. There's a possibility that we could nuke Iran and then Russia would nuke us in return. But I'm not going to sit around and worry about that because
I'm not worried about anything. I'm just talking about maybe investing in something that basically would be a detriment to the planet, but yet I could make a lot of money. And is that a good value?
I don't think it's something that is easy to do. And everybody's opinion is going to be different. So I guess if your opinion is that there's planetary destroying possibilities, then you have to make it your morality. I think morality becomes very, very personal in this kind of a situation. But thanks so much for the call. 855-935-TALK. That's our number. Give us a call.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
And I want to touch on the morality thing again just for a moment, because the more I thought about it during the break, the more I realized that there's nothing, if you want to apply morality as the screen, then you really can't invest in much of anything, because I can find an amorality, something immoral, albeit small possibly, in almost every business that exists. Banking, energy, healthcare, technology.
See, my mind immediately went to defense contractors because they're the ones building stuff that are going to blow us up.
Well, then you can't buy Boeing?
That was the one I was going to mention.
Yeah. So it really, what you end up with, if you apply that screen robustly enough, is a mattress with money stuffed in it.
Which you can
and
do.
Even that could catch on fire. No, I'm kidding.
But it won't destroy the atmosphere.
It will destroy somebody's house, maybe. 855-935-TALK. You can't even invest in food companies.
Not really, because they act in their best interest.
Yeah, they kill people. Anyway, I don't know. Let's go to
Big Arch
Let's
Burger.
go to Bellevue. Alan, welcome to Talking Real Money.
Hi there. I've been listening to you for 40 years, back to BRN.
Wow.
I'd like to thank you for everything you've done over the last 40 years. It's been wonderful. The main lesson that I listened to you and got from you is to pay yourself first. That seems to make everything easier because the rest is just details.
Yeah, you're pretty much right.
And by the way, here's the way.
And there it is. And we're off the air right now with those words.
Click. Here's the way I would do it. I would do it automatically. Mm-hmm. Most people have trouble writing themselves a check, but if it comes out of your paycheck every 2 weeks, it's gone.
You don't know.
As you said, the details, you're on to your life. I think that's just great advice, Alan. Really
thanks for listening for so long. And you are going to listen to the podcast still, right?
I don't know. I'm going to miss you guys. I like you guys bantering back and forth.
We banter on the podcast.
Even some of the jokes. We'll have to try the podcast.
Yeah.
I think you'd like it.
He likes
the jokes are better.
The jokes are better on the podcast, I think, because we don't fear the same level of censorship that we might get on the radio.
It's a good point, by the way.
Yeah.
Oh, really?
Yeah. We don't get that wild, but it's just we're a little bit more free on the podcast. So
anyway, you've been very, very sane for the last 40 years and very good, and it's been wonderful. And I'm still going to miss you. So
thank you. Well,
my Saturday is going to be different.
We hope you'll listen to the podcast on
anyway.
Saturdays. Thank you so much.
You.
And now that I've been sane for 40 years, I'm going to go insane. Now it's time.
By the way, we feel the same way about you. We will miss you. We will miss Saturdays. We will miss the interaction.
We're going to still do
I know,
it, though.
But it's not okay. But just to be completely frank, it won't be as much fun for us. It won't. Okay, I don't want to answer for you. It won't be as much fun for me. I love this. I love when you call with things we never thought of. I love with all of it. So it's been a huge part of my life for the last 12 years. Huge. So.
All right. You disagree with one of our reviewers on Apple Podcasts who said
it shouldn't be a huge part of your life.
He basically said, no, he said, I'm tired of the callers. So glad they're leaving Saturday. Anyway, 855-935-TALK. Let's go down to Americus, Georgia. Paul, welcome to the show.
Hey, fellas, how are y'all doing today?
Good, thanks, Paul. Thanks for calling.
I just want to say the last 6 or 7 years I've been listening to you guys, I've learned so much. I'm like all guys, we think we know everything. But when I started listening to y'all, I knew I didn't know that much about money, even though I thought I did. And you guys have just done so much. You've cured my hodgepodgeitis, got me down to a few simple index funds. And like I said, I just wished I'd have met you 30, 35 years ago, but I'm happy to have met you now.
We're better people now than we were 35 years ago, so maybe not.
Okay, well, that's good. That being said, I was going to ask a question, but can I kind of tell Tom my favorite dad joke?
Oh, please don't give him any more material.
I'm writing right now. Go, Paul. I got my pen ready to hit it.
So Tom, we hadn't done it lately, but a couple of years ago, my daughter was about 5 or 6. After dinner, we would go in the other room and come back and tell jokes to my wife. And we did this little kind of music we'd sing, come into the room, we'd tell these jokes. And one night we didn't really have, any made up. And I said, let's just do them live. And she starts out and she says, Dad, you got any good jokes to tell tonight? And I said, not really. And she says, that's never stopped you before.
Perfect. Ta-da. Absolutely. That's right. And for the last live hour, couldn't be any better than that. Yeah. That really fits.
The excitement.
Well, seriously, though, I kind of pigtailing what the guy was saying. It seems like to be a spousal thing. One's interested, one's a nerd like me, one's not. Once a year, my wife and I, we do kind of some estate planning. Just, at some point, one of us is going to die. Hopefully it's a long time from now. We're both in our early 50s. She's not interested. And I just, I start showing her, do this for the money, put the money here. And I think, well, maybe the easiest thing is to put it in a, simple target date fund, but realistically have someone manage it. Is it worth it to me just to meet with somebody once a year for 1 hour just to start that relationship, even though I don't want assets under management now? Or how would you guys handle that if you were me?
I would say 110% yes, for the fact that not that you're old in your early 50s, but you should have a plan for whatever could be on the horizon in terms of retirement. You should make sure, double check your asset allocation and make sure it fits what you're trying to do. And the third part is, as you said, to start perhaps building a relationship for when you may need one.
And here's a compromise between those two extremes. I think you should, occasionally meet with an advisor just to get a second opinion. But here's what I would suggest. Right now, pay for a real plan, a full-fledged, multiple hours of work plan. Plans are not static. They don't stay the same forever. But it's going to give you probably a high degree of peace of mind, particularly her a high degree of peace of mind, to see that document and to see what that means going forward. 855-935-TALK.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And one of the problems with the live show is that this is a 3.5-minute segment and we have 2 calls. So we're going to try and sneak them both in really fast. Let's go down to Phoenix. Rick, thanks for calling.
Good afternoon, gentlemen.
Hey, Rick.
This is Rick.
Oh, that Rick. Hi, Rick.
Yeah.
Rick, thank you for your
I won't
support.
take up too much time.
Yeah, thank you enough.
I'm calling to say thank you for all you've done, and it's refreshing to have truth tellers still alive and well in the media. And we will miss you on the radio, but thank goodness for your podcast.
Rick, thank you so much.
Rick's been to so many of our events and been so supportive, so thank you very, very much, Rick.
Thank you, Rick. Now let's go to Des Moines, Iowa. And Kathy, it's your turn. Welcome to Talking Real Money.
Hi, it's not Des Moines, it's Des Moines, Washington.
Oh, Des Moines, Washington. So it's Des Moines, Washington, not Des Moines. I always do that too. I always see it and I think Des Moines. I forget there's a Des Moines. What's up?
Well, okay, same thing. I just wanted to call and say thank you. I've been listening for 30 plus, getting close to 40. And I remember the most important thing was that you said originally was and I still don't literally know anything, but the most important thing was just start saving. And that really, really helped 30-something years ago. I also still have some of your mailers that you used to mail out because I was on your mailing thing. And I was going to bring them to the retire meet, but I couldn't find them to bring them and show you when I was there. So I'm going to still have to find them and so I can send them and see. They're in a file cabinet that got blocked by some of my son's stuff. But I'm sure they'd be quite interesting to look at 30-something years later.
I think my wife kept, the mutual fundamentals and the like. I think my wife kept them in some binders somewhere in the house. So I'm sure they're somewhere around here. But
I was just thinking other people might get a kick out of them too. But
you started listening when you were 10?
No, I'm going to be 68 this year. So
you are Tom's age.
Young sounding voice.
You have a young voice.
Well, thank you. But I really appreciate you guys, and I'm glad that you were available on the radio for us dummies. And I have figured out how to do a podcast now, so we'll still be able to follow you. But I really appreciate both of you guys.
Thank you so much, Kathy. We really appreciate you, and keep listening. And by the way, we truly appreciate all of you who have listened to this radio show for as long as you have and who listen to the podcast regularly. And really, we'd like to encourage you, please become a podcast listener because it's the same thing, just more of it. 5 days a week
it's
we do
on
a
your
show.
schedule.
Yeah.
You don't have to time things out. And by the way, one final thought thank you for all the calls and the interaction because we've learned as much from you probably as you've learned from us about many topics, about many situations, and really how we can best help you. So that's been fun, really fun for me.
Yeah, and it's again, I don't want to make this sound like the experience is over because it's really not. This is not an end. This is just a slight redirection.
Yeah, okay, because we've been doing the podcast for a long time.
Yeah, I mean, we've been doing this show becomes a podcast. And it's become a podcast every week. Every week I edit this down. I mean, the good news is, because this is a radio show, there are like lots of commercial breaks.
Yeah.
The podcast won't have that. When you listen to a podcast, you're going to hear it straight through without commercial breaks. So it may actually end up being better in some ways.
Indeed. Straight through, no commercials, more information.
So
more fun and more great jokes.
Even if you don't know how to use the podcast app on your phone or your tablet or whatever you've got or your computer, I've made it really, really super easy for you. Just go to our website. It's easy to remember. It's talkingrealmoney.com. When you go there, you will see right at the top of the page what is called a podcast player. And you can just click play on that and listen to the latest podcast, or you can scroll through back the back episodes. It's really easy to do.
You can subscribe, too, and we'll send one to you every day.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor. Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services. Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.